and welcome to this Forex Preview here at X.com. I'm Milan Deltas, and joining me today is Marios Hadjikyriacos, investment analyst, and we'll be discussing today about Fed rate decision on Wednesday and the outlook for the dollar. So Marios, the Fed is widely expected to keep rates unchanged, so the market reaction will probably depend on what Chairman Powell says during his press conference. How do you see this one playing out?
Well, they're most definitely going to keep rates on hold. That much is not debatable, I would argue. So yes, all of the market reaction will depend on the tone of Chairman Powell during the press conference. Now, I would argue that he's most probably going to maintain a neutral tone. The US economy is evolving more or less as they expected at the previous meeting. However, if there is any change in tone, I think it's more likely to be towards a more cautious or concerned narrative. Now, the argument, well, first of all, there's economic data. Real wage growth has slowed down lately. At the same time, we've seen the broader labor market lose some steam, so jobs growth has moderated. At the same time, job openings have declined. This shows some signs of stress in the labor market. And even though we've had the ceasefire between the US and China on trade, trade risk has diminished, but at the same time we've seen China risk more broadly with the coronavirus lately and the implications that might have make a comeback. So I would argue that if there is any change in tone, it might be towards a more dovish narrative. We are monitoring international developments and the state of the US economy. If weakness persists, then a rate cut might be in order. Maybe not, his phrasing won't be as strong as that, but I think that might be the message with a changed tone. Now, if this is the case, that would argue for a negative reaction in the dollar during the press conference. And
bearing all this in mind, what is the outlook for the dollar?
Well, I think it's still positive. So even if we do see a negative reaction after the Fed, I think the broader outlook for the currency is still positive. And my argument is, where else do you go? There isn't that much alternative to the dollar right now. So the European economy is still struggling, interest rates are negative and might go lower even. A very similar situation is true in Japan. The economy is stagnant and interest rates are extremely low. Emerging markets, I would argue, are extremely risky in this sort of unstable trade environment. So I don't see any other real alternative to the dollar, which still offers very attractive interest rates and also has some safety given that it's the world's reserve currency. So I would argue that the outlook around the dollar is still positive, and for that to change, I would either need to see the Fed start cutting rates again, or the European governments announcing some form of fiscal stimulus to boost growth in the euro area. I don't think either of this is likely over the coming months at least, so it might be a favorable period for the dollar going forward.
So thank you, Marios.
Thank you.
And thank you very much for watching here at XM.com.